Bitcoin has broken through the short-term bullish trigger at 28,200. This has resulted in a strong rally toward 29,000. However, Bitcoin still remains between the 28 and 30,000 major yearly resistance. In today's video, we'll be talking about the short-term and the macro, so let's get into it. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. We're here to talk about Bitcoin on the smaller time frame and on the macro chart. Now, Bitcoin has broken toward the upside, breaking over the 28,200 POC level represented by this horizontal red line. If you remember back to this chart here, guys, we were talking about the different ranges and trigger points for continuations. As we saw a breakdown of our bearish trigger, resulting in a move towards to retest these lows over here, which of course was our bearish target. We saw that retest, we saw that tick off. We then saw a gradual climb upwards, breaking through some of these resistances and finally breaking through the only one of significance, which was this POC level resistance sitting at 28,000. 28,100, 28,200. Since then, we have seen Bitcoin enter this lower resistance range, which facilitated a strong move towards 29,000. We'll be discussing this in a lot more detail in just a moment, along with the macro charts and so much more. So consider smashing a like button, commenting any questions, and of course, if you're interested in daily content, we talk about Bitcoin daily on the technical perspective, a structural price action perspective, a macro perspective, focusing on the data, the charts, no bullshit, no hype, no emotion. So click that subscribe button. If you want more content, join us on Telegram. The second link down below, you get access to all our charts, all our updates, all of our analysis, educational posts, news events, videos, so much content in here, guys, to look out for. It really is one of the best places to be. You can also join our VIP channel, guys. That is going to be all the information down below for that one. We have a sale at the moment. We have 8 membership slots available. You'll get access to 2 channels. Our main VIP channel, which is over here. Again, you'll get access to everything in the free channel, including trade signals with entries, targets, stop losses, and so much more. And you'll get access to our group chat, where we have a multitude of different channels in here, such as trading and charts, general chat, videos, and so much more, guys. Content and information about all that kind of stuff can be found in that free channel. Go ahead and contact me via this message over here. Let's get into a video, guys, starting off with the market data. So, how are we looking for the month? Now, we're coming very, very close now to the end of March. We're up 25.28%. We have less than 48 hours, I think less than 48 hours remaining in the month, and it's going to be very interesting to see where Bitcoin closes. And we've been talking about the monthly close for quite some time now. What we do know, guys, for us to see any sort of flip of this current macro resistance, we're going to need to see that monthly close about 30,000. And the monthly close about 30,000 is by far and large the most significant data point we're looking for to confirm a higher time frame uptrend. Now, there is no doubt we've been in an uptrend, right? We've been saying we are in a uptrend ever since we broke out of this descending wedge, right? This falling wedge structure, we are in a uptrend. This phase over here was reversal, this phase over here was bullish, and this phase over here is macro bullish, okay? We're different phases, we'll come back to in a second. But for us to see that flip of this resistance, we are requiring a monthly candle close because it is a yearly long resistance. For this one over here, we were looking at a weekly close, okay? It was a monthly resistance, weekly close, yearly resistance, monthly close, okay? We need higher time frame confirmation on higher time frame resistances or supports to get that confirmation validation, and we're coming very close. We have about 3 days and 21 hours according to the chart over here until we get the monthly close, and we're about $1,000 away from retesting the upper resistance level of this monthly range. So it's looking pretty decent. Looking at volatility and volume, we're looking at 30% increase, on 24-hour volume, sitting at 112 billion, and 24-hour liquidations are up 51%, sitting at 135 million. So climbing quite high there, guys. Let's take a look at the breakdown. So within that last 15-minute candle slots over the last 24 hours, we can see a lot of shorts are being squeezed over here. We are seeing some longs liquidate. These will be higher leverage longs, but mostly coming from shorts, guys, in that last 24-hour period. Looking at overall volatility, guys, if it does load, we'll take a look. 30-day volatility is sitting around 3.59% again on the rise, and 60-day volatility is sitting at 3.19% again, slightly on the rise. Let's take a look at broader markets. So DXY is still in that descending channel formation again. This is an overall downtrend where the DXY drops, asset prices increase. However, this downtrend will be coming to an end once it breaks this downtrending resistance. This is a descending channel formation. Therefore, it is a bullish consolidation. Eventually, we expect this downtrend to break and the DXY to rise. We're not expecting any sort of significant rally in the DXY unless 103.5 is broken. If we break outwards, this is going to be our next major resistance where we could be pushed back toward downside from. If we break upwards and we break through this resistance, that is when we expect a higher time frame continuation for the DXY and more of an aggressive reversal in play. Until then, guys, like we've been saying for the last few days, we are in a downtrend. While we are in a downtrend, it is logical to assume the downtrend is going to continue until the rejection or until that breakout comes into a reversal actually comes on the charts. So expect the DXY to continue downwards unless that descending resistance is able to be broken. Moving on to the Dow Jones, we can see again as the DXY drops, the Dow Jones rally, and we do not expect too much happening over here. Again, we have a few key levels we're looking at. This uptrending support line, the dotted trend line. If we remain above that, we are in an uptrend. If we lose that, we are in a downtrend, currently in a higher time frame uptrend. On the smaller time frame, we are still very much in a downtrend. Okay, this trend is very much facing downwards. We would like to see a break of this trend line to see any sort of flip toward the upside. But overall, on the higher time frame, we are now in a slight uptrend, and we do not expect the DXY to really facilitate any sort of crash of this trend line just about yet, especially if it doesn't break above 103.5. So keep an eye on it. Nothing too much interesting is occurring over here. However, S&P 500, a little bit more interesting, but still not too interesting. We are seeing a bounce from that 4,000 level. We did see a nice strong bounce from there. We are retesting some of these local highs over here, sitting around 4,050. But again, the key level we need to break above is going to be 4,100 for a continuation upwards into this major resistance zone. Until then, we are actually technically at resistance here on the S&P 500, and that could result in a little bit of a pullback. So keep your eyes on that over the coming days. Let's get into the main stuff though, guys. Bitcoin, this is where it gets interesting. So we've talked a lot about 30,000. We've talked a lot about these resistance. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. Ranges, and in today's video we're going to go over it again because it really is significant, and we do need to reiterate that time frames are relevant and resistances do remain as resistances even if we see pushes into these resistance ranges. First and foremost, guys, really quickly, resistance ranges, they are broken up into certain subsections. So if you take a look at this entire resistance range, the resistance within this range is not spread evenly, meaning there is going to be periods or areas within this overall resistance range that attributes a higher amount of difficulty to push past, and some ranges that attribute less difficulty to push past. We've seen that in this instance, particularly on a smaller time frame. We've seen as soon as we broke over 28,200, we saw us into this lower resistance range within our macro resistance that facilitated a stronger move upwards. We've seen that in this instance here, and it's a good example of how overall resistance ranges can remain as a resistance, while when you're in these resistance ranges, there are periods or areas within that resistance that actually are easier to move through than others. And we can use a VRPV to actually identify those areas. We'll come back and talk about the short term. So the $30,000 resistance on the monthly chart is really that key level. If you look at the 4-year cycle, guys, we can see how on prior cycles, every single time we break above that $30,000 level, or in this instance, the prior yearly low of the bull market, okay, prior yearly low of the bull market, every single time we close that monthly candle above, we actually never end up closing a monthly candle back below it. And this is a really good indication of overall trend, particularly the overall strength of the trend. Now, if we're seeing a monthly candle above 30,000, that is going to be that candle close, or that monthly candle close, that would trigger an overall macro uptrend according to our prior horizontal resistance ranges. If we're looking at the bull market, however, we do need to see a few more things. Ideally, we're looking for the bull market to start around about the same time as we've ever seen in prior cycles. So we're looking around 17 bars from the bear market bottom. So we're looking at around March, April 2024. So we do not expect the price to get over $48,000 until March, April 2024. Now, this could be accelerated due to certain developments in the economy. Maybe the government, promotes Bitcoin, maybe central bank digital currencies come in sooner, and all these things can affect Bitcoin's performance. But going off historical data, guys, we do not expect the bull market to start until March, April 2024, and we definitely don't expect the price to push too much higher than 48,000 before then. However, above 30,000 is going to be a really good indicator that the overall macro trend is very much steady and very much up, okay? Looking at our higher time frame here, we have seen a cross over the midline on the Gaussian channel. Again, guys, this is a really good indication that the overall trend is shifting aggressively upwards. This is on the weekly chart. Now, we've seen indications on the weekly chart already of the downtrend ending and the uptrend beginning. Like we said at the start of the video, guys, we have expected, and look at Bitcoin over here, we'll come back and talk about it a bit, some crazy volatility over here, guys. Like we have said already, guys, we expected the bottom to be in well before we saw this rally. We had a falling wedge structure right over here, okay? This represented decreasing momentum, decreasing velocity, decreasing speed, decreasing liquidity, and decreasing volume, extending from what was our, and this is on log scale, sorry, extending from our bear market structure, which of course was a descending channel. When we have a overall bearish structure, so this structure over here, a overall bearish structure, this is our bear market, and then we have a bullish consolidation as an extension from a bearish structure, it signifies a reversal. So we already had a reversal in play. We've seen the reversal play out. Our reversal target, in fact, was a breakout of here. Our first target being this upper range, 25K, a breakout of 25K. Our next target being 30 to 28,000. We have seen this. This is now a yearly resistance, meaning if we do not get a monthly candle close above this, this entire trend can still flip toward the downside. For actual complete macro validation of a macro uptrend starting, we do require a monthly candle above 30K. Until we get that, there is always going to still be a small risk that this entire trend upwards gets reversed. Although it is incredibly low, the percentage chance of happening is incredibly low, it is still a possibility, and therefore we do need to get that validation on the higher time frame. Back to the Gaussian channel, guys. Every single time we see a push through the midline on the Gaussian channel, we actually end up seeing the price push through the Gaussian channel and actually ends up entering a macro uptrend. We saw it over here. We saw it over here, ignoring the COVID crash, okay? So overall chart over here, guys, on the weekly is looking fantastic. If we take a look at some of our moving averages, such as what we have over here is the 300 moving average, this blue line, looking really, really, really good again. The price action is above the 300 on the weekly, which is a great sign. Looking at the 200 over here, and again you're going to see it more of this purple line over here. The price action is very much above the 200. Again, the 200 being a massive indication of an overall macro shift. It is looking very good. It is looking very bullish. And finally guys, the 50 EMA, another really strong indicator. We are above the 50 EMA on the weekly, and again the 50 EMA is kind of lining up the range low of that Gaussian channel. If we change it to the monthly chart guys, we can see a strong bounce from the Gaussian channel midline on the monthly chart, but look where that upper range is sitting. The upper range is sitting just under 30,000. Again, there is still a lot of resistance at this $30,000 range, even though the weekly chart is looking really good. And all that does, it increases the probability of a break toward the upside. The last time we saw a dip into the Gaussian channel break upwards was over here in October 2015. We saw that break upwards, we saw a continuation toward the upside. Looking at this again guys, we can see the 50 EMA has actually been closed over on the 7-day and the monthly chart, which is great to see over here, sitting around 24,000. So we are above all of our major moving averages. We are above our major resistances besides that yearly resistance, and the technicals on the higher time frames are by absolutely no doubt signifying macro strength and overall uptrend. However guys, if we're looking for points of reversals, we need to look at horizontal historical resistance ranges. And that is why we're saying, even though everything is looking fantastic, there is still resistance here. I'm going to continue to say, guys, there is still resistance here. And by me saying there is still resistance doesn't mean I'm bearish. I am bullish. I've been bullish since this entire range. I bought 18,000, I bought 16,500, I bought 19,200. I have held those positions. I am still in those positions. I still expect a macro uptrend to occur, but realistically, I understand what trading is all about. I understand that when we are at resistance, resistance is resistance and until it's not. I understand that technical indicators are lagging and they're not going to tell us the direction of the trend. They tell us the strength of a trend. And I understand that predicting macro reversals or major reversals in price, we have to use horizontal ranges rather than lagging data. And according to our structural data over here, we can see this resistance is still in play. And if this resistance does reject the price, it can still move down. So before we get into our short-term analysis, let's talk about the possibility of a rejection on a higher time frame and what our targets would be. And let's also talk about where we think the price can go if we break 30K. So if we break 30,000 guys, where could Bitcoin go? Looking at our volume ranges, the main significant area of resistance if $30,000 breaks is going to be this 46, 48,000 range. That is going to be the significant area, okay? The incredibly significant area. Breaking above here will be the point at which the bull run should really start to pick up momentum and strength. Again, we're not in a bull run yet, but it will start above 30,000. It will develop and it will really start to pick up and into that bull run phase above 46. 46 is the main level, okay? Looking down from 46, we can see there is a decent amount of volume and resistance above 30,000. In fact, this entire range up to about 40,000 is quite strong resistance. We haven't seen strong resistance like that in a huge chunk for quite some time. In fact, this is going to be one of the strongest and slowest moving ranges we'll move through. If we do push above 30,000, don't expect massive volatility. Don't expect a huge green candle pushing up to 40,000. It will take months, quite literally months, to push from 30,000 up to this $40,000 range if we do break a monthly candle above 40,000. Again, that supports a 4-year cycle, which does say we don't really expect the bull run to start for quite some time. Even if we get that confirmation, even if we get $30,000 breakout a monthly, we don't really expect the bull run to start into April 2024, March 2024. It will take quite some time still. So let's go back to this chart, guys. If we do fail to close a monthly candle above 30,000, yes, there is still going to be a possibility of a macro rejection that does come in play, and the price could still push toward the downside. Where could the price go to? Well, we're looking at $12,000 to $14,000. Again, looking at the VRPV, guys, again, this isn't the best chart to do it on, but looking at the VRPV, we can see around $12,000 to $14,000. I'll go to this chart instead, actually. It's a little bit of a better chart to do it on. If we look at the VRPV on the $12,000 to $14,000 range, we can see a significant gap. Okay, not only do we see a significant gap, if we look at the horizontal price action, we can see within this range we have some points of confluence. We have local tops over here on huge long yearly resistances, and again local high ranges of those same resistances in which we broke out of. We went into a parabolic rally. So we do know this area is massive resistance and support, and that is going to be the next higher time frame target if we break down from 25.2, from 19,200, and more importantly 18,300. I've said it once and I'll say it one more time. We are macro bullish. Okay, we are macro bullish. We are not in a bull run. Okay, we are bullish and we are in an uptrend unless 20,000 to 18,300 breaks. Every single pullback that occurs should be considered a healthy pullback until 20,000 to 18,300 breaks. Let's get into the short term. I hope that summarized the macro. I hope that shed some light on what's going on in the macro, and I hope that kind of opened your eyes a little bit to the truth and reality of the charts, to not get too much FOMO right now, because while we're in resistance, guys, this is the worst possible time to buy Bitcoin. If you wanted to buy Bitcoin, it should have been done already. This is quite frankly the worst time to buy Bitcoin. Right at resistance, right under 30k. You've seen the confluence, you've seen the resistance, you've seen the significance of this level. Do not be buying here. Buy on the breakout, buy on the monthly close, but do not buy now. Do not buy right here. Okay. Short term, okay, we saw a break upwards. Very good stuff, guys. We saw the break over 28,000 POC level. We saw a strong rally entering a low resistance range. We're seeing a strong move toward the upside. We've created some degree of a local top here. And just while we've been doing this video, you have seen the aggressiveness, the volatility of the price action in this low volume range. It doesn't take a lot of orders. It doesn't take a lot of volume to push the price massively up and down in this range. Like we said, while we're in resistance, resistance is resistance, guys. And I'm repeating myself a million times. Really drill it into your head. Resistance is resistance. Buy supports, sell resistances. Don't buy resistances just because the price is green. That is how you get wrecked. You might make a few percent, but in the long run, you will get wrecked. So, looking at the current range, everything still remains. The only difference now is these ranges that we were looking at before have flipped. These are no longer resistances. These are now going to be acting as supports. Again, the strong downtrend, okay, occurs. Oh, I spelled strong wrong. All right, strong downtrend occurs below this red box over here, this support, the $27,000 level. Lost, we expect a strong downtrend. Everything remains the same. Looking for volatility and velocity to speed up on the downtrend if we lose these local lows, okay? And our targets, our downtrends are going to be, again, these same supports. These supports are targets, okay? Moving down, these low volume ranges in here are targets, and of course, 25.2 to 24.4 is also going to be a bearish target if we continue down. Every single move from here continuing upwards, in my eyes, is completely irrelevant. It does not matter to me. I have my spot bags. We have our spot bags. We expect the uptrend to continue. It doesn't matter. The only point of significance now is the $30,000 level. This is the only area that we actually care about right now. Let's quickly take a look at the technicals on the charts, and then we'll close up the video. So there's one thing I wanted to show you guys on the daily chart, which was the RSI and the price action. And if you've been watching the channel already for a long time, or if you've been doing TA for a while, you would know that you need confluence, you need confirmation and verification of your breakouts. What we have seen over the last few weeks is, of course, decreasing momentum, rising price. We still very much have a overall bearish divergence. This is still very much a bearish divergence. Whether you like it or not, we still are seeing a bearish divergence develop in the price. We have seen a break of 28,200. We haven't seen a break of 30,000. And what we haven't seen is a break of this RSI. This break of the RSI will signify a shift in momentum. Like we said in our prior video, for us to see a break over 30,000, we're going to need to see a break of this RSI trend line first. This RSI will break first before 30,000 breaks. It's going to be a great indication that the momentum has picked up enough to push us through that resistance range and get above 30,000. But we have not seen the RSI break upwards, and therefore we have to still consider that we are still in a resistance range, and therefore the price can still come down. Watch that RSI, guys, on the daily chart. It's going to be incredibly telling in regards to what the momentum is doing, and the momentum is incredibly telling as it is a leading indicator on what price action will do. So watch that RSI. Obviously, obviously incredibly important. Look at the overall trend, guys. On the daily chart, we can see again the Gaussian channel is still representing we are in a overall uptrend on the daily chart. Moving that onto like a 3-day chart, a 2-day chart, we can see again very strong uptrend developing over here on the price action, but these indicators are lagging. The higher time frame we go now, the more they're going to be indicating a uptrend. We have to go down to smaller time frames. 12-hour chart, no weakness showing currently, okay? 4-hour chart, still a little bit of weakness has been shown over here. We have seen a break into the Gaussian channel below to retest the lows of the Gaussian channel. This is generally a sign of overall weakness. The trend here has suffered weakness, okay? This is an indication of weakness. If we push back towards this level, the probability is that we lose these lows here significantly increase. So watch the midline in the Gaussian channel again. This lines up with those horizontal resistance range, 27,500. The midline of that current range, that middle support range within our current horizontal range over here. So watch that midline in the Gaussian channel. If we lose that midline, it's going to be a very strong indication that we're going to come back and not only retest these lows, but we're actually going to break through the lows. Until then, we are above the Gaussian channel on the 4-hour, so we're looking quite decent, but we have seen quite a strong rejection wick. Be very interesting to see what occurs from here. Again, guys, we are still underneath these 4-hour lows now. The 4-hour candle has not closed above 28,600, which of course is going to be that upward trigger as it is the local high of the range. So the price action right now in the short term, don't expect anything too significant. Anything that does happen, expect downtrend. If it does go up to $30,000, whoop-de-doo, it doesn't matter. We need the monthly close above it, okay? High time frames, looking very bullish from a technical standpoint. From a structural standpoint, not looking very good with our macro resistance. There's a few points of confluence on the higher time frame chart that does suggest a continuation upwards. There's also a few points of confluence on the higher time frame chart that does reinforce the statement that 30,000 is going to be a massive point of resistance. Even if we break above 30,000, guys, we have a long journey ahead of us before we enter a macro bull market from March to April 2024, and there is a whole chunk of resistors between 30,000 and 40,000. If we do not break above 30,000 on a monthly chart, the risk of a breakdown continues, and that risk will continue until a monthly candle does a close above 30,000. I hope today's video has been informative. We didn't do too much TA today, much more price analysis, much more macro analysis. Tomorrow's video will be sure to focus a lot more on the technicals for all of you scalp traders out there and all you short-term traders. But for the macro overview, we covered it quite well. If you got any questions, leave them down below. Hope you enjoyed. Sign up to Bitget, support the channel, join VIP for trader signals, and I'll catch you guys in tomorrow's video. Cheers.